right, welcome back to Financial Clarity for Doctors. I'm Corey Janoff, joined as always by Rachelle Zanden.
Hey, hey.
And we had a little fun at the end of 2023, or maybe it was beginning of 2024 when you heard it, making some predictions for the new year. And we're going to do the same again and review 2024 a little bit, see how we did with our predictions, talk about 2025. Now, big disclaimer, this is just for fun. We do not have functioning crystal balls. If we did, we wouldn't be sharing them with you. We would just make trillions of dollars and go live on our private islands. Um, so keep that in mind anytime you're reading like a newsletter or people telling you the things you need to do or be aware of. Anyone that has a truly good idea that they think can make a lot of money, they're keeping that idea to themselves. They're not sharing it with you. I'm sorry to tell you that, but that's the case. People are greedy, and now that may be a little harsh. Our job is to help people realize their financial objectives and you know, capitalize on any opportunities out there. But there's no secret sauce. There's no like special double top secret thing. If you do this, you're gonna get 20% guaranteed returns. It doesn't exist. Like everything has its risks, everything has its probabilities, nothing's for certain. So that's why we want to be diversified, don't throw all our eggs in one basket, be mindful of the news and economic events, but don't try to overhaul our entire portfolio because of them. Take things into consideration, but don't bet the farm on it. So again, we're just having some fun here, trying to take what we see in the world around us, shed some light on it, and what we think might happen, but we reserve the right to be very wrong on all of these predictions. And some of them we'll definitely be wrong on, especially maybe the
Sometimes it's
long-term
more fun
ones.
to be wrong.
Yeah,
Yeah.
gives you a learning opportunity.
Yeah.
But how'd 2024 look, Rochelle? Year in review.
Good for most people. Like the stock market did great. Inflation cooled. I know we're still feeling the lasting effects of inflation from the last couple of years, but it wasn't nearly as bad in 2024. The economy was strong. No like big unemployment numbers or anything like that. People have jobs, they have money. Generally, again, not everyone. So it was a big win for investors. Absolutely. Like if you had money to invest and you're investing, like you probably did really well this year. But today we do want to go through like what did we say specifically? Like, were we right? Were we wrong? And it's fun to reflect on those things, especially when we are wrong. I don't think it's as exciting when we're like, yeah, we were right on about that. But it's like, okay, like, well, that one we were way off on. So there were a few things that Corey and I had in common that we both thought were going to be the case in 2024. Neither of us thought there was going to be a recession, and we were right. So far, so good. 2024, there was no recession. Corey thought that people were going to like lose their minds a little bit in the back half of 2024 over elections. Yeah, I think that happened. I think it depends on what you mean by lose your mind. But in my neighborhood, people were for sure freaking out. How about in your neighborhood, Corey?
I don't know if people were freaking out and like burning yard signs or anything, but there's definitely people on both sides. I live in a pretty purple area, I should say.
Yeah,
So
I do think like Central Oregon is very unique and Bend specifically in that way.
yeah, it's funny because you can, like, and I have a lot of friends on both sides of the aisle, so it's definitely, and I generally avoid politics. It doesn't interest me too much, and I'm rather in the middle myself on a lot of things. And like to kind of just poke the bear and whatever side someone is taking, I'll sometimes just play devil's advocate to whether it be annoy them or just out of curiosity for conversation purposes to argue. But yeah, it's funny to hear people's differing opinions on the same issue and
Yeah, like
the
when
reasons
they have
for
the
them.
same information and
Hmm.
they've come to radically different conclusions. That
Yeah.
happens.
So
Yep.
I think it's obviously I'm biased for myself, but I think it's healthy to kind of get different opinions and why people think the way they do. Um,
Hmm.
but yeah, I don't think anyone was jumping off of bridges or moving to Canada or New Zealand or anything like that. So
Yeah. That might have happened more in my neighborhood. It
yeah,
was
Portland's a
solidly
little more
blue.
blue. Well, did any of your neighbors list their house for sale and go
No,
flee? Yeah, it's all
no, I
talk.
mean, but in reality, like people can talk about that all they want, but realistically, most people can't just pick up and move and get a job somewhere else. Like you
Yeah,
can't just get a visa. Like we talk a lot about immigration in the news in terms of like people moving here, but it's also hard for people to move from here to somewhere else. Like
yeah.
if you even wanted to do that, it's probably unlikely.
And
Okay,
there's
moving
definitely,
on. No
yeah,
more
moving on
politics.
from election stuff. So pros and cons, depending on what your circumstances are.
Absolutely.
Feel like it's
Yep.
all blown out of proportion though. But all right, so yeah,
I
um
suggested that student loan payments resuming would have a big impact on spending and like people would stop spending quite as much, et cetera. I was so wrong because student loans basically didn't even resume payments like they did for a handful of people. But like in the middle of the year, like everything was just shut down for a while. Almost no one had to recertify their income. So if you were in an income driven plan, it's basically like been stuck at what it was prior to 2020 forever. Like almost no one's had to recertify their income. And then in the back half of the year, if you'd enrolled in Save Plan, which a lot of people did, you got put on forbearance again. So many people didn't even have to make student loan payments. So obviously it didn't affect their spending.
yeah,
Done.
student loans. Anything, there's going to be more craziness with them. There's a prediction.
Yeah. 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 I think I suggested that there would be modest decreases in interest rates. There were technically like from at the top, like the Federal Reserve reduced the rates, like the is overnight lending rate, right? That's the one, right? I don't remember.
Yeah, the
But
federal funds rate. And
the federal
mortgages
funds
came
rate.
down a little bit in
But for
2023.
like a second, then they went back up. It's like honestly so
Well, if you
confusing.
compare it to the end of 2023,
Yeah.
they came down by about 1% because they were
Yep.
like high sevens in fall of 2023.
Got it.
And
Yep.
then, came down to the high. There was a brief blip where it was like close to 6%, but
Yeah,
then it
there
went
was.
back
And then
up
it
to
went
about
back up to like
7.
more than seven. Yeah,
So they came
exactly.
down, not a lot, but a
So I guess I
tiny
was kind
bit.
of right. I thought there would be more volatility around the election. Like I thought that as headlines were happening and it's like this person's going to win, that person's going to win, we care, blah blah blah. I thought there would be some swings in the stock market, but that didn't happen too much. I think the biggest swing happened after the election. Like we had a solid couple of weeks where everyone was like, or the stock market at least was like, stock market, we love Donald Trump,
Stock
basically.
market was pumped and
The
crypto
stock
really
market
was
was
happy.
pumped. Who
Crypto
was
took
happy?
off. Crypto, like
I know
Bitcoin,
it's
went
so
to the
weird.
moon.
I
So
don't even get it.
I
Whatever. I'm not
think
going to
part of
pretend
the
I understand
reason
that.
why, I mean, it's easy to say this in hindsight, but the reason we didn't see that much volatility is because there weren't any big surprises. Like
Yeah,
Trump
it's true.
winning, the
I think
clean
we've also
sweep.
become numb to the things that politicians say. Like, I think that when some of these more outlandish things were said out loud previously, people reacted to them more. But now we've become sort of like, oh, this is just what people say
Yeah,
at Madison Square Garden, etc.
true. I also think like the outcome, no one was really surprised
Well,
with any
yeah,
of
I
the
mean, it was just a
outcomes.
toss up the whole
Yeah.
time. So,
So that's why the stock market generally does not like surprises, and that's what
mm-hmm.
shakes it usually.
Yep.
Let's see, more medium term. I'm still standing by this. Picking individual stocks is going to be harder and harder. I'm going to say I was correct on there so far year to date. And this is December 11th when we're recording this, but as of December 10th, 150 companies on the S&P 500 index have outperformed the index. So only about a third of the companies are doing better than the index itself. So you got a 1 in 3 chance of picking a winner if you're picking stocks. Good luck to you.
But most people are picking the ones at the top anyway. And they're
True.
having a
Yeah. If you
time.
filter at the top, yeah. But I mean, who picked
Yeah.
Palantir Technologies? I actually know one person that like a couple years ago asked me to buy Palantir Technologies and they're
I was just
kind of
thinking about like, yeah, yeah,
best performing stock this year. Who would have thought? Um,
cool.
but uh but yeah, and let's see, housing prices likely won't decrease. I was correct. They went up a little bit. I think the supply and demand. We'll talk about housing a little more here in a minute, but
Hmm.
I think
Yeah.
more demand than
I
supply.
made a medium term prediction about tax rates potentially increasing slightly as the Tax Cuts and Jobs Act expires. Apparently, I had some thoughts at that time about what the election result would be because that seems unlikely based on what the election result actually was. So, even though that hasn't come to pass yet, I think we could solidly say that that's unlikely. I also said that I thought housing prices would remain high, leaving more people renting, less people buying. I think that's also correct so far. But again, these are more medium term projections. So predictions, not projections. That's different. So we'll see what continues to happen over the next couple of years.
long-term predictions, jury's still out on all these, but I said stocks will still be the best place for the majority of people to grow their wealth over time. And in 2024, it sure looked that way. S&P 500 up almost 30%. Don't expect that every year. So I also said envy will continue to drive growth in consumerism. Hard times will drive innovation, which I still think is pretty true. True, people have a desire to outpace their neighbors, which fuels growth. But if you look historically, we really haven't had any major structural innovations in decades, like transportation, building, communication. We've seen a lot of technological advancements that have made things more efficient, but that's only going to take society so far. And we really don't know what's needed until we need it. So it's probably going to take some crazy event happening before we see another major innovation that reshapes how we live and operate in this world from a structural standpoint. We'll continue to see technological advances to make things quicker, easier, more efficient to use, bring services faster. But yeah, curious to see what happens over the long run.
Yep. I mean, I feel like mine were way more nebulous, but I was just talking about how I thought environmental changes and demographic changes over long periods of time would have a big impact on the economy and like how our kids and their kids live. That, who knows? That remains to be seen. I think it's a pretty safe bet, but we'll see. Still using my crystal ball over here. Um, and again, I said that I thought the stock market would still be a good long-term tool. Who knows? It's not long-term yet. Moving on.
Our final predictions throughout
For
there
last year,
that
yeah.
Miss Americana, Taylor Swift, would eventually get back into country music and hit the Forbes 400 list sometime in the next decade or so. Hasn't gone back to country, but her net worth's growing, estimated at 1.6 billion, but you need 3.3 billion to be on the Forbes 400 list. So
That's
maybe next year.
insane. Yeah. I
Who
don't
knows?
think we've met any aliens yet. That was my weird one-off prediction for long-term final
Yeah.
step.
We saw
We'll see what happens.
those Chinese spy balloons that we thought might be aliens briefly, but it's just China spying on us.
Just China. Yep.
Yep.
Moving on. But coming up is 2025. What do we think is going to happen this year?
Let's see, 2025. What do I think is going to happen? I think the stock market's going to have another positive year in 2025. And in reality, I'm just playing the odds. I have a 75% chance of being right.
Yeah.
75% of the time, it works every time. Um, yeah, stock market's up 3 out of 4 years. When it's up, the average up year is about 20%. So don't be surprised if we get another positive 20 plus percent year. Um, that's just kind of the norm for positive years, but there's about a 1 in 4 chance the market goes down. And when it goes down, the average negative is about 14%. So could be up, could be down. Odds are it'll be up. I
Let's
mean,
go back and forth with like the categories. So like I think stocks will be up in 2025 also, but maybe not nearly as much just because I don't know. My only logic is the last couple of years were great. So maybe this year will be slightly less great. Maybe we're just running out of runway a little bit. But one of our advisors here, he always likes to say that bull markets don't die of old age. Like there's got to be kind of a reason, like some sort of catalyst that makes the stock market go down. And I don't see that happening this year. But again, who knows? Like if we could predict this, we would have a lot more money than we do.
yeah, I agree. We've had 2023 and 2024 were the two best consecutive years since the late 90s when we had the dot-com boom. So the odds of seeing another year that's in the mid to high 20s is unlikely. So I would say positive, but not positive 30, probably in the
Mm-hmm.
teens if I was guessing. But I mean, the economy is pretty darn strong. People have jobs, they're spending money, companies are making money. Inflation adjusted earnings and earnings per share are basically at an all-time high. Most companies this year beat their analyst expectations. Obviously, all of this could change next year. It's pretty darn hard to keep growing earnings at this pace. But, when I asked my kids Magic 8 Ball if next year will be a bad year, it said unlikely. So
I like
I'm,
that.
I'm going to go another strong year.
I did make a note that I thought maybe there would be some increased volatility, but I don't know. I just recall that when Donald Trump was president previously, sometimes he would say a thing And it would be like the stock market would go up or down 2 or 3%, depending on what he said on social media that day. And there was just a lot of reaction to things that would come from him directly and things that he would say. But again, I do feel like maybe we've become a little callous to that. Maybe we won't see as big a swings. So, okay, I guess that's not really a prediction. It's just hemming and hawing a little bit.
Yeah, I mean, I could see depending on what happens, he's indicated a lot of things he wants to
Tariffs
do, and
and
if some of
mhm.
those come to fruition and it's again, if it's a surprise, stock market doesn't like surprises. With our new Department of Government Efficiency, if they decide to like fire the entire some department, like, let's just get rid of the Federal Reserve. I don't think they can because the Federal Reserve is independent but I mean, who knows? Something crazy could happen, and that's where you'll see some volatility ramp up. Okay, speaking of the Federal Reserve, I think the Fed will cut rates by less than 1% in 2025. We're not exactly throwing out hot takes here, anyone. Um, like that's probably why we haven't been too wrong with the predictions, is because we're not going out on a limb here saying anything crazy. But see all the above reasons. The economy is humming along. There's not a big reason to cut rates.
Mm-hmm.
So
Yep.
I think they'll come down a little bit, maybe like 0.75%. We might get 3 25% cuts, or 0.25% cuts, I should say. Um, I don't know. Uh, Again, I
Yeah.
reserve the right to be wrong on all of this, but I just don't see the economy weakening enough or inflation dropping precipitously to where the Fed's going to feel compelled to, slash rates by 1.5 or 2% next year.
Right. Yeah. I think rates for consumers will remain relatively high, or what they perceive to be high. And people will continue to complain about inflation, even though it's cooled quite a bit. Like people are still adjusting to higher prices from a couple of years ago. And it really seems like that hasn't hit home quite yet. I mean, the Federal Reserve has also basically said that they're not going to lower rates a lot next year, that they're going to be slowing down. Like the economy's doing well. They don't want to do a ton more. But I think it's interesting to see like people's perception of the economy versus what it actually has been and how we measure that. So, we've talked a lot about how the stock market has done really great. Like inflation adjusted wages are pretty great and all of that kind of stuff. But people don't feel that way. And I don't know that that's going to change.
Yeah, and I mean, when you say the economy, it can mean a lot of things. There's a macro
Yeah.
economy, there's micro economy, there's your local economy, there's your personal economy. Like if you have a job, you're making money, you live in a prosperous area, everything's good. But if you're one of the, call it 6 million people that is unemployed right now, the economy sucks. Like you're having a tough time. Or if you got laid off from a high paying tech job and you're not able to find that same high paying tech job anymore, like that's not good, like for you personally. Like it's demoralizing. So there's definitely people out there anecdotally that are struggling, and that's probably always going to be the case, especially in a capitalist society. But as a whole, like when you add up all the data and the numbers, our economy is as strong as it's ever been, arguably. um, you know, ho like airline travels hitting records, hotels are booked, prices are going up because people have money and they're spending money. Um, so yeah, I think, we're going to need to see some more, you know, job losses or whatever before we see a real downturn. But things can change quickly. We've seen it happen before. So who knows? Um, on the interest rate thing with mortgages, I'm predicting mortgages are going to stay in that 6 to 7% range. Demand
Mm-hmm.
exceeds supply for housing. While 6 to 7% feels high compared to what we grew accustomed to between 2010 and early 2022, it's historically pretty reasonable. Yeah, and I think a good thing to look at to try and see what mortgages might do or where they might be headed is to follow the 10-year treasury yield. Historically, the average 30-year mortgage, it is pretty much in lockstep with the 10-year treasury and hovers around 1 to 2% higher than the 10-year treasury yield, which is currently, as of this recording, right about 4.2%. The treasury yield is. So right now we're seeing about a 2.5% spread on the 30-year loan rate compared to the 10-year rate, which would suggest mortgage rates should come down. But again, see that the demand exceeds the supply. More people want to buy houses than there are houses for sale. Um, if the Fed cuts rates, that could impact the short end of the bond spectrum. But I think the 10-year has already priced that possibility in. They expect short-term rates to come down. Right now the 10-year yield is basically the same as the 1-year yield. So when you see a flat yield curve, it means the long-term bond market thinks rates are going to come down on the short end. Um, and if that happens, then we'll have a more normalized yield curve where short-term bond rates are paying lower interest than longer-term bonds. But yeah, if we expect the 10-year to basically stay around where it's at, that means mortgages probably aren't coming down a whole ton, maybe a percent. But I think they'll maybe settle in that high fives to low sixes if things normalize. But I could still see them staying in where they're at just because of the supply demand dynamic.
It makes me feel a little bit frustrated because I feel like a lot of people were sold houses and encouraged to buy houses when interest rates were high, and they were told by their real estate agent and their banker, rates are going to come down. You're going to refinance. It's going to be fine. Like, ugh, maybe not. Maybe not enough to make it worthwhile to do.
What was it? Was it Yogi Berra, one of his quotes? Predicting things is hard, especially the future.
Hmm.
So, I mean, sure. I mean, the mortgage people, the real estate agent, they just want to sell you a home and sell you a
They
mortgage.
want to sell you a house. Yep.
And
Hmm.
they might have very well intentions and conviction that, yeah, rates are coming down, but we were spoiled for a decade plus with 3% interest rates. Like that doesn't exist. Like we
And
need,
even your convictions are influenced by your self-interest. Like, do not convince yourself that that's not the case. Like you might very well believe interest rates are going to come down, but part of that is driven by the fact that like that's the result that you want. Like, I'm going to believe in this thing because it will make me happy.
yeah, I think trying to
I
predict
don't know.
the direction of interest rates is probably even harder than predicting the direction of the stock market.
Mm-hmm.
I know the odds are goes up 75% of the time, so I feel pretty confident there. But interest rates, are they going to go up, going to go down? Who knows? Flip a coin. Like your guess is as good as anyone's. No one really knows what's going to actually happen.
Yep. You talk about your crazy events.
So yeah, I predict again, really going out on a limb here, but there will be some crazy events that we didn't see coming. And this year. There are every single year. And they may or may not impact you directly, but it happens every year. Those quote unquote once in a lifetime events or once in a generation events. When you think of all the once in a lifetime or once in a generation things that could happen, like it's bound that multiple ones are going to happen yearly or even daily. Um, it's, I think, oh, I was listening or reading something about, how miracles happen every day. It's like when you just when you analyze all of the things we do like tens of thousands of decisions and actions every single day. Multiply that by the billions of people on the planet, you can expect around the globe, basically multiple miracles to happen daily when you
Hmm.
just put the odds of big data together. But highlighting just a few things that happened in 2024 that no one really saw coming, or maybe we're not surprised that they happened. But cybersecurity events are a big one. AT&T and T and Microsoft had major service outages that crippled certain industries temporarily. Communication, flights, banking, point of service payment system, healthcare. We saw United Health and Ascension Health have their systems basically shut down for a couple days, which causes big implications in your world if your hospital doesn't have access to the EMR system or their internet is out or whatever. That can create some serious issues for your ability to treat and provide for patients. We saw Asheville, North Carolina get flooded, which who would have thought that would happen? And isn't Asheville at like 3,000 feet of elevation or something? Um, but Florida got slammed by back-to-back hurricanes. I mean, the extreme weather events, the cybersecurity, I think we're kind of used to it at this point. But if it happens to you, that's a pretty significant thing that can rock your world. It could expand internationally too. I mean, just going off of recent events when we're recording this, Syria's Assad regime was toppled, which will have rippling implications across the Middle East and Russia and Iran. President-elect Trump has already indicated he wants to get involved in the Israel-Gaza situation, which, who knows what could happen there. Are we going to get into another war? Um, Go to war with Iran? Who knows? So there could be a lot of things that have ripple effects or trickle down effects that impact. And I'm guessing there'll be things that happen that we don't see coming. There always is every year. 2023, we saw banks collapse. Like, who would have guessed?
Oh my gosh. Yes, you're cheating by saying expect the unexpected because, of course. But I'm going to say random things that maybe will happen that could be unexpected, but they're not going to be because Rochelle said them out loud on the podcast.
Self-fulfilling prophecy.
Maybe some increased geopolitical conflict with China, not necessarily us and China, but China in general, just causing some trouble. I don't know. Maybe another. Yeah, basically, that's what I'm going for. Trade wars. I mean, this is not that unexpected. Like, it really depends on what happens with the threat of tariffs originating here in our country, but that can escalate. Like if we start to do things, then other people start like adding tariffs to our goods that are being exported, and those kinds of things can make big ripple effects in economies like here and globally. So that would be a big deal. But who the heck knows? Like realistically, no one does. And we'll see what happens as we watch it in real time.
Yeah. Again, not exactly hot takes on our end. Anyone who semi pays attention to news and financial events could probably predict these things if they wanted to. But again, we want to reiterate that it is very difficult to predict the future. Anytime you see the talking heads, prognosticators, etc., take whatever they say with a grain of salt. I mean, we've got news networks that have to fill 24-hour um, broadcasts. So they're going to get some people on there that might say some outlandish things. And those are the ones that attract viewers. So the more outlandish the takes, the more eyeballs they might get, the more retweets and shares it'll happen. We got, there's more podcasts than there are people out there right now. So, everyone has a microphone if they want it. Sometimes they have multiple microphones, and you're going to get some conversations, some interviews that pick up headlines, people who seem to have a decent resume predicting some outlandish things. And I would caution anyone against taking action on anyone's predictions, whether
Mm-hmm.
positive or negative predictions. Like it's just a guess, anyone's guess. It might be an educated guess, but you're people are bound to be wrong from time to time. And a lot of the prognosticators that throw out, outlandish things, it's again, it's just to make headlines, really. And if they're wrong,
Mm-hmm.
no one really pays
No
any
one's gonna call them
attention.
on it.
Yeah, no one
Yeah.
calls it on it. But then
No.
it's like, oh, this person predicted the 2008 recession. Well, they also predicted ones in 2011 and 13 and 14 and 16 and 2025. And they say the Dow is going to crash to 5,000 and the S&P is going to go down to 1,000. Like, probably not. It might happen, but if you say enough crazy stuff and some of it sticks, then you're going to get picked up by news outlets. You're going to get a book deal. You're going to get to go on a speaking tour because, oh, he or she was predicted that big thing that no one else saw coming. It's like, all right, we're not in
Maybe
that
we're in
game.
the wrong business, Corey.
Yeah, no, I don't want to be in that business
I
of
don't want
just
to be in that business
making shit
either.
up and then, trying to get lucky. Like, no, diversified sound planning, um, you know, invest in a little bit of everything because you never know what area is going to do well over time. I am a believer that long term, be optimistic because, in the short term, sure, be cautious, but long term, I still believe in, our human growth potential and we'll see long-term growth over time from our investments in the economy and whatnot. But, be prepared for craziness in the short term. Have proper insurances, have an emergency reserve, live within your means, but at the same time, you can't protect against everything possible out
Mm-hmm.
there. So you kind of just have to live your life as well and hope for the best.
Yeah, definitely. I think the bottom line with everything that we always talk about is like think about what your goals are, make some plans according to what those goals are and what you can achieve. And like, don't worry about the stuff you can't control. And this is all stuff we can't control, really.
Yeah, I like this. Bring it over here. It's probably going to be reversed on the webcam, but Carl
Nope. Oh,
Richards.
you're not supposed to put that on there, Corey.
What am I not supposed to put on?
You don't have licensing for that. That's all
No, I do. I
copyrighted.
got this. This
No,
is
podcast.
I purchased this from him. I have the right to share it. Whatever. Google it. It's on the internet. So one of my favorite Venn diagrams, two circles, things that, and this is great for an audio, but things that matter, things that you can control, that little part that overlaps, that's what you should focus on. Focus on the things that matter, which you can control. There's
Yeah.
plenty of things out there that matter that are out of your control. Plenty of things out there that you can control that don't matter. So, find that interlap. What actually matters that you can control, focus on that and, try your hardest not to worry about the rest of it because again, it either doesn't matter or it's out of your control. So,
Yeah. Thank you for listening, everyone.
see you next time.